Warning. As for the warning, the company's CFO saying that second quarter earnings per share are going to fall, in his terms, substantially below the current analyst estimate, which happens to be 70 cents a share. The company also saying it won't give guidance for the rest of the year. Costco saying its January same-store sales, by the way, were flat compared to last year, saying its sales of non-food items being hurt by the economy and being hurt by price cuts.
All right, joining us for an instant on this is Matt Tuttle from Tuttle Wealth Management. Matt, what do you make of the news and the fact that the futures dip lower and then now in positive territory, 5:03 in the morning Eastern time, so it's hard to make a lot of it. But what do you think of that movement?
Yeah, I mean, it's same news, different company. So I think, the market, especially at these levels, doesn't really care about bad news. It expects it. It's only really going to react a lot to really good news.
What about the idea that Costco would be a place that people kind of trade down for the Walmart effect? I mean, I guess Costco doesn't benefit from that as much as a Walmart would, does it?
Well, I think they benefit on the food side, but where they've gotten hurt is the gas prices, the big merchandise, and the dollar. Yeah. So, certainly people are probably shopping there for food. I know I do. But it's the bigger ticket items and the other issues that are really hurting them.
I think the general feeling about Costco is it's similar to Walmart, isn't it? Matt, it's if Costco is hurting, isn't that just a clear sign that everybody's hurting? And if that's the case, if Costco's kicking us off here, it doesn't seem like that's a good sign for the rest of the retailers, for sure.
Oh, yeah. I mean, definitely, I think, everybody has expected the rest of the retailers to be weak. This just confirms what everybody's already knows about the economy.
Do you think it's a buy? Costco as a stock during these times?
During these times, no.
Why not?
I don't know that anything is necessarily a buy here. I think that there's a lot of risk in buying a company when it's just announced bad news like this.
We'll see how much it trades off today. You would think it would on the warning. It's down already by 12% this year. We're only in the beginning of February. Thanks, Matthew. We'll get back to you in a little while.
All right. Well, today, President Barack Obama is set to release his plans to get tough on Wall Street firms. And it starts with a crackdown on executive pay. Companies getting so-called exceptional assistance will not be allowed to pay executives more than $500,000 a year. And if the banks want to give those execs stock, they can't sell those until the government is paid back. Other banks getting just a cash infusion from the government will have less strict limitations. And the president even wants changes for banks that do not take a dime of TARP money. The plan calls for financial firms to give shareholders, quote, say on pay, and executives would be required to hold company stock for several years before selling.
All right, in the meantime, debate continuing in Washington on the $885 billion stimulus package, or even more than that by the time they're done. Who knows? Senate Republicans have been objecting to the bill, saying it includes too much spending that does not target things that would immediately boost the economy. A lot of debate yesterday centering around a $246 million tax break for Hollywood studios, for example. Eventually, it was taken out of the bill. Now, meanwhile, the president on a media tour pushing his stimulus plan, saying it needs to be quickly passed. His press secretary, Robert Gibbs, says the spending Republicans are complaining about amounts to less than 1% of the total bill.
Well, and President Obama is trying to soften a controversial part of this stimulus plan. He says a Buy American clause would be a mistake right now. The European Union warning him about protectionist policies, and the president says he doesn't want a, quote, trade war. Democrats and trade unions are in favor, of course, of a Buy American clause, which would give construction contracts to U.S. firms.
Yeah, that's an interesting topic, no doubt. Now, we want to get on to some of the other business stories of the morning, including this a story about Ticketmaster, near a deal, apparently, to combine its operations with the concert promoter Live Nation. This is in the Wall Street Journal, which says the boards of the two companies have not yet approved that deal, but if it does go through, company now would be called Live Nation Ticketmaster, and the deal, they say, could be announced as early as next week. Would not involve any exchange of cash if they go through with it. Now, shares of Disney falling 7.5% after hours, so that'll certainly be a stock to watch today. It reported earnings of 41 cents a share. Big miss compared to the analyst estimate, which was 52 cents. Revenue also short of the estimate, down as well by 8% from last year. The movie studio at Disney suffering its sharpest drop in sales, and just about every earnings report lately has have a scary comment from the CEO. We were talking about Costco's from the CFO, but Disney's chief executive Bob Iger says his quote, this is, quote, likely to be the weakest economy in our lifetime.
Well, in just about an hour from now, we're expecting results from Time Warner. Now, this media giant could be hurt by the very same things that are hurting Disney's movie studio, but analysts will also be watching comments about ad revenue at